bring that to a unified understanding. How did we start this? We did constitute an ESG committee for the banking sector that has representatives from many of your institutions. Now, the mandate of that committee is really to address aspects of understanding how you handhold, how you work with the different members. Each member is at a different level. How do you support each other? That's one of their mandates. Capacity building is also one of the mandates that we're taking on, of course, with the support of committee and partners that we are getting on board. API has been very instrumental for us, continues to be, in terms of the technical assistance that we are crafting for the financial institutions to be able to, one, understand, but most importantly, report. If I just speak to the reports that we get from the financial institutions and ESG, you really see there's a knowledge gap. And there's also pressure, and then there is knowledge. So people are struggling when I need to show that I'm working. But they also need to understand what they are working on. So regulator puts the pressure, we want to report, you don't want to look bad at the regulator side, so you kind of fix certain reports, and then when we come to verify, or even the team review, you come to verify, they need to find that what you've stated is actually what is on ground. So there's efforts that we are working on to improve this, that really speaks to the sustainability that we are speaking to, and the journey that we start in terms of addressing protecting things. So as I conclude, I want to thank each and every one of you, our partners, the member financial institutions who have been on this journey with us for the past 5 years, and we are still together. And this was, let me say, I would like us to remember, and I think for our chair did allude to this, is a simple act of saving. The first step, and you gradually increase. Savings from the formal financial institution. The challenges retort around affordability, accessibility, convenience. I think somebody will keep money in a mobile phone and not put it because I can use it. Is that what we want to push? Maybe not. But for us, it's to, think our minds. How do we get this and protect their gains? So let's transform the work that we're doing into testimonies of financial capabilities, but also let's build an industry that is not only profits oriented. It's not always about profits, but it's about impact, it's about outcome. How do we position ourselves to be drivers of the SDGs, the UN SDG goals? And this is an opportunity for us as financial service providers, players within the financial sector, to show that we are not always minding that much about profitability, but we want to also see that our customers thrive, our institutions contribute greatly into the space of sustainability. So I want to end here and thank everybody for being with us here this morning. And we look forward to the conversations during the course of the day. I'll be back at some point when we have conversations in depth. So let me hand back to the MC and thank you again.
Thank you very much, our partners from the Uganda Bankers Association, for that message. Allow me to recognize the CEO of Exim Bank, Mr. Nadike Edward. I do not know if the Tobacco Foundation has arrived. All right, can I request the Tobacco Foundation to stand up and give it that? Thank you very much. you that stay in the central, I don't wish to tell you more about the foundation. But you know that anything with regards to the kingdom in terms of salary numbers, but also imports, the Global Foundation comes in handy to making sure that we can be able to reach the last mile customer. So we thank you very much for accepting and graciously being a part of this event. Many times, when we come to the institute, our aim is to make sure that many of you come and study, to go to us every week. Allow me share the behavior for studying at the institute. Dr. You do some more information. I make up for the So many of you are not about that, they're going to go to study. Here we will and study. Here we will and study. Yes, that's what we want to essentially what we want to do. We want to make sure that you come to study at the institute. As part of the program is going to be about our CEO. Allow me to share with you a few insights of what our CEO is. What we want to know about that. She sharing. However, I think this is the part of the woman who she's the first student. The other one of diagnosis, she wanted she's related that has transformed so many things as it's part of what she location that I part of the region, the standard for the commission. Dr. Neil stand up for the commission. So when we talk about things that I feel like I used to speak like a little. So if we have a very number of them that if you have the order of the world, we can use that that's where as a real value. I didn't see I the new law, she's really behind that. I don't so she has changed a number of things in terms of how we went to the institute. But when we look at all the short course programs, she found and really behind all those short course programs to make sure that the bank can be able to study in those short time to be able to be competitive and not funds. But when we talk about there are many people in the institution that can be able but our CEO so good in denying the doctor. If I don't provide everything it's project, but it's high impact, and you continue to make sure that this program evolves over a period of time. So CEO, thank you very much for your contribution line running the industry. She's married and she's healthy. Generally, we will have our senior.
Wow, thank you very much, Gava, for those introductions. You see, that's the reason there has to be institutional memory. Gava is new. So he's telling you a number of you, maybe he said that's right and come and clarify. Yeah, so the introduction were received. I definitely was not the first brewer, maybe the first female brewer. I definitely was not the first president. The first female president, I definitely is not introduced the short concept. And then we've been around for 47 years, and then we short concept throughout. I definitely was not, you can say, okay, I mobilized, but the people in the room who are in 2020, Semakula, Ronald, all these people know that we sat in a room and said, what do we do after COVID? Everybody was struggling for money. Remember, we wanted our images. If I tell the story, significant, what do we do? At a time when we were eating pineapples for 500 shillings, We were working to work. I remember the first campaign, the Your Money Plan. So it is not government. We started as a team and a group, and coming to this level, team member, that's why they are going to do. All we are doing is say, can we sustain this? And why will you do it? Because we know what behavior is. You can learn something, but behavior needs to be moved in a different way. It's going to be campaigns such as this, and I want to appreciate the people who spoke before me. Chair, you made my work so easy. I'm delighted that you understood it, and that's why you have been here for all this long with us. So today, I'm just going to take you through this year's campaign, what we did last year, this year's campaign, and why we are doing it. All right. So I think now about the campaign. We really set it up to amplify the intentions of World Savings Day. It was all to celebrate World Savings Day in one day. We come together as an industry to celebrate World Savings Day. That's what it was. Every mistake. And you know, many times we are told, sometimes it's very easy to us, right? People need to understand what is said, what's going on to relate with the subject. Going to be inaugurated is. Now, we started off by saying something. We do an hour this week. We realized that we're going to be on. So we started looking at some we said that actually is to put everything where people understand. And I want to give that the financial literacy curriculum. Because when they send it this something we're going to be like, that's why the regulator that provide us with capacity and we utilize the curriculum to cover these pillars. We realized that we try to have them, it was never going to work. So we decided to do a month, and eventually we realized you can never do it in a month. If you are going to do a new campaign and longer, and what does that mean? It needs you, of course, it needs resources. Right? So we went to total finance, the UPA Bank of Uganda, in collaboration with all sector regulators and associations, and of course the institution. We have been mentioned before, and I did a good job of mentioning them. We really thank them. So the campaign focuses on two major issues: personal financial management and sustainability. In 2 years, we realized that sustainability is critical. So the campaigns, the three campaigns we ran previously have both done elements of sustainability. As the educators, we know when we look at sustainability, we understand the level of understanding, Patricia has actually mentioned it, how we are struggling, and we also realize that there is not going to be any financial health and sustainability in terms of financial. There's not going to be any financial wellness if we don't put up for some sustainability. And that's why we have had this elected. So let's talk about last year's campaign. Last year's campaign was saying protect growth. It was sustainability and personal finance. And saying protect growth, we utilize that umbrella. Some of you may remember. The issue was as you get out of your house, like today, don't wait out of an umbrella. You can imagine what happened with it. Didn't go out without one. You can imagine what happened with them. So it was about again planning, saving. You save yourself, and grow. It has all the pillars. They are saving, insurance, borrowing wisely so you can grow, investing, of course, crypto finance and everything else. Most importantly, it had an element of our life on land and life underwater, sustainability. We want to thank the partners they are all that we work with. We thank you for doing an amazing job. That's how we launched it. We had the executive director supervision, Dr. Manzi was with us, of course, our chair and Director Wilbrod. We are very delighted. That was our signature for that time. The team you see there were the people representing different organizations at the launch. We want to thank all who have funded us. You can see where the money came from. Can we grab most especially for the country? And can we grab very much for making that finance? They're really done from job. On that level, we receive the money, so we can still receive money. That campaign. So if you're not sitting on board, we are going to be together for the next 7 to 9 months. Let us make it work. How do we utilize? You can see the campaign launch, campaign production, financial literacy trainer, the campaign logistical events, online trainings. So what we decided and what we decided, we will not stop us. In fact, last year we said, can we go out and talk to the people? And that's something that we did a lot of it. Online trainings, they were all virtual, we did mass media, and we did connect with the people. So increasingly, we are connecting with the people, and this year, we are going to connect with you. What's happened? So, in summer, what did we do? I think that, yeah, there's such a here. Yeah, can you hear me? They can hear. I think you hear me. So we had 13 institutions that we engaged, right? And that included banks and farmer grants, and we had 2,805, 2,000. And now we have 829 participants. We went to schools and institutions, universities, we went to 11 of them. We found 1,200. So we could actually see 1,108 students and staff reached. We went to the markets, engaged the markets, 25,300 people using the market radio. Not just so we do that, then we go to the radio and sing to them. To the church, where we did 45 participants. We did 9 sessions of webinars where we had 716 participants. Digital outreach, we have 104 that got reach. We had some sound sports and reached 7,800 people. Media, about 851, and then 10 million on radio. So now, so this was our markets. You can see it's radio, it's not just so. If we are able to go to markets around the country, you can imagine the number of people that we shall meet, that we shall talk to. Because you talk to physically, but you also go to the market. And I want to tell you, after happening with that, it's a bit easier. They say, I talk to them, I'm going to sell to them. But if I go out and campaign, I see clearly, this is using the voice that is good and pushing people to come to order. It's not it. And you see that as a caring that is working for them. So this is an example of a school. Because we went to these were some of the press coverage ideas. So what about ABSA 2025, 2026? And why we continue to do this? In terms of the financial landscape, and this is from fiscal 2023 and the Figures Reports 2024. You can see that 7 out of 20 adults operate at the deficit. They do. 9 out of 10 always have unexpected events. If it's 9 out of 10, definitely in here we have very many. And if it is 7 out of 10, definitely in here we have very many. 7 out of 10 don't have long-term plans, and it's true. And 60% have retirement uncertainty, and that settles me, you know, and everybody else. And I keep telling people, by the way, I'm very open about it. The scientific background, and then we go into life. I keep telling people, and I went to the institute to start looking at these numbers. That's when I said to realize the financial interest is very important. So there are very many people like me out there, like you and me. I also know that I was in a bank. I'm sure there are very many bankers that suffer the same. So retirement opportunities for any sector which we get and utilize interestingly. So saving behavior, 39% safe to cover expenses. And then it has increased from 2018. Now people are stagnated. But I think now it's safe to cover living expenses. You know, the people that accounts, 26 accounts excluding mobile money. And I like the fact that people are saving on mobile money. It is a good thing. Are we saving? Really? No, really. You think you're right, you do right. You did. And so you can borrow and somehow disappear, then you know. So I think that we are going to be strengthened. Formal institutions saving, 54% savings from institutions. It's the same with the formal institutions. It's very many benefits. In terms of you are already invited that you know. Insurance coverage, 6% have at least one insurance product. And 6% coverage for retirement benefits. So unsettles us. And then 17% mobile savings from June 2024 to 2025. It's a good thing we say. The question is it real? So what's the focus for this year's campaign? Focus on planning, saving, investment, responsible borrowing, insurance, retirement, digital finance are very important. May I recognize the chair of who is the chair for the Financial Trade Association of Uganda, Daniel. Thank you very much for coming. You know, if there are two things for now, other things that we are very proud of, I think Daniel will join the 2021 financial, when we did the awareness campaign, Bank of Uganda asked that we get bankers that we train on financial literacy. So we got our cohorts, the first cohort in the awareness month. And it had some 2 or 3 staff from the institute. I said, well, you can't take people there and you don't know. Daniel was one of them who brought in the institute, and 3 others. Ronald is here. In that training, they got motivated enough to set up the Financial Literacy Association of Uganda. Is that a thing of the awareness campaign or not? It is. One of our sequel, I think to write a book. Financial literacy. So when we say join us, it's not for nothing. There are things that are happening. The association, I hope you always remember your roots. The core message that we are going to have is transitioning from money today to money today and tomorrow. So I don't think of financial growth leads to sustainability. Is that money today? Tomorrow and forever. Forever means now also to get to a level. What do you call it? Your generations to come. It is also very sad when you have some little money, reasonable money, and when you die, it grows. So we are talking about sustainability, and these are things this people will be telling us about. Also, through the ESG lens, people, planet, profit, individuals, and institutions. So it had a dual ESG focus. How financial institutions and how are you planning? Are you green lending? Do you have climate insurance? Do you have sustainable operations yourself? 2, how individuals spend? How do you spend? Do you spend unnecessarily? Do you reduce, reuse, recycle? Do you renewable energy? Do you have energy saving equipment so you can save? Do you have responsible consumption? So these are things we're talking about. And for FIS, it is in 2 ways. How and how to use the money. I remember Director Michael said, can we support the people in the village? So when you have somebody, when you put somebody upstairs in the village, and it's the same for individuals. So it's the first campaign, 7 to 9 months, rolling out, starting of course with the whole entire pillars. Strategy goal, strategy. So the rest of ESG framework evaluation in the sector, measurable SDG indicators important. We say the sector has what the provider. So we've tried as much as possible to align with the goals, the national development plan. Now you've heard of the tenfold growth, not possible we are saying because a lot of domestic, we could like to have a lot of domestic needs, so we can grow. In the campaign that we think we talked about, and the goal of the higher household incomes and full monetization. So here are the insights. And before we go into the insights, we have this. Who is our plan B? Please put up your hands. It's here. So our plan B is a child whose birth presentation and decided upon the parents who make preparations for the pregnancy and the child arrival. Child who's wanted to you know, they are people who tell me, if they don't, I don't know. And you will see some of these things come. My child is going. We are thinking MIT. And like, but when I see you, MIT, said, hey, for us, we started a long time ago. When we got the child, we did what? Education insurance. So that one is not a trans child, you know. But we are telling you how the device survived your wife educated on education insurance. In this house, now, in this room, they are few. So there is intentionality and there is preparation, right? Then we intended to have a child and took steps to make it happen. The challenge is, I don't know what the plan kids do after they have problems. And that's what we are trying to address. Preparation, the parents prepare for a child and what they need, financial, health, and education. So that is our planned child. Okay? Now, you are going to have this day. I don't think that's and this is why they say by very many grandchildren also. Grandchildren, they come and say, no, I don't think that's come. They like us. They tell them, my tell me, in reference to our grandchildren and habits. So of course, we have been supporting them. So you plan them, you give them, then they start to work, then they lead agency to workplace. Then that's it. So in terms of our planning habits, living out, struggling, and you know, but seriously, reality guidance some planned adults. Because for me, that's why you're planning children. You start to work, you start to see money. So if you are a financial child, they will go back to if you get your money and you have no idea about planned adults, where are you going to end? And is the majority of us? I think it is that was it. But I remember him saying, it may not be him. We can be responsible for. You're not responsible for your poverty, neither your poverty. But when you answer, recently, even throughout this campaign, I was interfaced by 7 levels of financial wealth. You know, where you become, where you're independent, until I don't know where you don't care about what you do. So much freedom that Bulwana style. So first for reach those levels, you have to plan. You look at the plan and you say to yourself, hey, so this is where I am. It's possible to die when you have never been one free. So that is what the plan was. Adulthood. So this is the campaign. Financial health from academics to sustainability and adults. Now let me tell you about, so you can see what we have in there. You have a family, you have a graduate, you have let me also to level black so that you can see they are both export. So we are talking about people thinking, you know, in fact, it's retired half. Is sustainable. It is because you took some good choices along the way. Some may kill themselves, which can be worse. So this is what we are talking about. If you go back to the campaign goals, empower individuals and organizations
the health sector, we have an insurance cover. It's both life and medical. Person pays 198,000 shillings per year. And you're assured of 1 million for inpatient, 1 million outpatient. In case of permanent disability, there is 2 million. And other covers, other things it caters for is like if you've been admitted in hospital, like for 4 nights, they get off the first night, and for the other 3 nights, you're given 30,000 shillings per night to cater for your expenses. Registration is free. You just send the word live, it's 115, and you get the website and you register yourself.
Thank you. Before you do that, somebody will do that. How many of us will do that? You. Thank God. One person in the ocean. People, how much can one, how many of us can afford 190 for somebody? They are unplanned adults. Eh? And how much can that do? These are the little things we are talking about. So we can't bring them, come want them to be a partner because we want to make sure at every time when they meet about 20,000 people. So we want that 20,000 to understand that that 190 is planning, you know. But also we can speak of the other messages. So these are the kind of things we want. So I spoke about WEDI and like the other programs, but we would like to promote all the products that speak to this message. As a partner, when you come on board, we speak to all those things that speak to the message from your organization. But for me, that blew me away. People go for 50,000 to speak and they can't afford it. They have bodies that they live in Mulambo because they can't afford it. But there is 190 that you could have spent before the person does what? It's there. Thank you so much. Yeah. I think some of you who are saying that government will have a role to ensure that the preservation of that territorial people are encouraging this in. So I wouldn't stop my CEO from presenting, can we give her a big round of applause? We have done well, and I'm sure that the campaign has something. I want to just add one thing, but for all of you who last year and even this year, we are taking our financial fitness programs to your institution. So if you're interested, this is a conversation we can have. Last year, we had about 9 to 10 people participated where we had these financial fitness programs with the employees. And it's exciting. If you're interested, please just let us know and we can be able to do it. So I want to welcome the one of our board members. Thank you very much for being with us. And in the same spirit, I want to appreciate the presence of the Director of Corporate and Public Affairs. Thank you very much for joining us from Magical Center. Without any further ado, in front of all, I'm very allowed to invite the guest of honor and I'll invite our board chair to invite our guest of honor this morning.
Thank you very much for that very insightful presentation. Mine is a small, just invite our guests of honor to address us. I want to thank you, our audience, for being very attentive. And in the following through, we can make it. I very believe, and I have no doubt when I look around. I'm privileged to look at your faces. I see this happening. Let's keep following. So, our guest of honor, the governor of Uganda, represented by Mr. Owia, so today the risk and strategic management is come and take care of us.
Thank you very much, Board Chair. I think we've been seated for a while. Maybe we could start up. So that you, yeah.
the planned adults, like you have said. I don't know if I'm a planned adult or the planned one. Yeah? All right, you can take your seats. Governor introduced the CEO as one went to Mabunda. Now I'm also supposed to give some airs. Yeah, went to school. Now you have this. Yeah. So Mabunda went to school. And no. But there is one school. Yes. Ladies and gentlemen, my name is Philip Andrew Wabuya. I am here to represent the governor. And because he was very specific about this topic, he wrote a speech. I was already telling him, can I just summarize? He said, no. I'm passionate about the topic, so you'll have to read it. But before I do that, I would like to say a few words. I am so excited to see the team from Uganda Financial Services. The energy they have is amazing. And Gabby, you forgot to introduce one person. Do you know who you forgot to introduce? Juga Ford. Did you? You talked about it. Shall you stand up and the looking at it? And the resident have to live my life. I'm excited because I have enough years in private sector. I can tell you, when governor asked me to present, he was very sure associated with all of this. I want to see Stanley, and in part of Uganda, I've with operations. So if you know, those days when the dollar was very active, the man was behind them stabilizing petroleum funds. I was there. I'm supposed to stop the people that actually used to encourage to know what to do. So today I stand here before you to represent the government. Please don't quote me that Philip has become the governor. I'm just reading the speech from the governor himself. Let me start this speech, and I'm going to read it verbatim. Once in a while, I'll just elaborate some of the things. Chairman, the board of Uganda Institute of Bankers, board members of the Uganda Institute of Bankers and Financial Services. Chairperson, represented by Madam, what is the issue right there? Patricia, I'm not forgetting you. All right, Uganda Bankers Association, Patricia, the CEO and Financial Services, Madam Dorothy, the CEO of Uganda Insurance Association, the CEO of Deposit Bank, and of course the various CEOs of my financial institutions and supervisors, distinguished developers, members of the media fraternity, ladies and gentlemen. If I haven't mentioned you, please forgive me, your ladies and gentlemen. Thank you very much. This is the governor speaking. Today we gather here once again to celebrate World Savings Day, observed annually on the 31st of October 2025 this year, but this has been going on since 1924. This year gives us an opportunity to reflect on how our efforts here at promoting savings among our people as part of the social transformation initiatives. It is a time to assess how far we have, the challenges ahead, and to strategize what lies ahead. The day presents us yet another opportunity to educate the masses about the importance of saving their in regulated financial institutions. Can I repeat that? Saving their money in regulated financial institutions, rather than keeping the money hidden away in various places. Uganda joined the global celebration in 2016. And I'm glad that we have commemorated it annually since then. This year, the World Trade 2025 is being honored the theme financial health from economics to sustainability. This occasion offers us a timely reminder that building financial resilience, cultivating a savings culture, both at the individual and national level. The theme underscores the importance of financial behavior, moving beyond the cycle of living on a daily, weekly, or monthly annual to progressing towards financial resilience and long-term sustainability. Individuals and households to adopt money management practices that meet immediate needs while promoting lasting financial well-being and leaving room to absorb financial shocks. If I spend my time on what we mean by financial health, financial health is not only about having income. It is also about how individuals mind, save, invest, and plan for life's uncertainties. It is the ability to meet day-to-day needs, while still preparing the emergencies, retirement, and other long-term aspirations. Achieving financial stability requires consistent financial planning, disciplined saving, effective use of modern financial services. These tools enable individuals to manage money safely, conveniently, and affordably, fostering resilience and security. That's what I mean by financial health. It's not about having the income. When we look at Uganda's financial health status, Uganda has made commendable strides in promoting financial inclusion through many Ugandans continuing to struggle with the aspects of financial health and sustainability. So while we have no steps, a lot of Ugandans continue to struggle with the aspects of financial health and sustainability. According to the study by FinCo of FinStop 2023, 21% of Ugandan adults financially included and informed. However, this is the part which all of you should pay attention to. 70% of the Ugandans spend more than they earn. I think that's where we start having planned and unplanned numbers. Effectively, operating with personal value dependencies. This very concerned about the long-term sustainability of many households. Financial stability is alarming among the youth. With half of the young population providing a plan for long-term financial security. And unexpected financial shocks, like we saw in COVID, can greatly affect their lives. 9 out of 10 Ugandans reported experiencing unexpected expenses or events in previous years. So these unexpected are not these weddings and these are things that we can talk about, mostly due to illness, agriculture risks, theft, which significantly expose and increase the risks to individuals. The Bank of Uganda implemented several financial literacy initiatives in collaboration with various stakeholders. These interventors continue to empower citizens with knowledge, skills, and confidence to make informed financial decisions. Some of the initiatives, such as community outreach, integration of financial education in schools. I think most of you have heard of the school competition that has rolled out. And targeted awareness campaigns have helped Ugandans better appreciate the value of savings. The more recent World Bank Finance reports noted that 73% of Ugandan adults have an account with any bank, mobile money, or cell phone. However, access alone now, if the same is not used to support productive economic activity. We need to turn this access into an enabler for regular savings. So what do we mean by sustainability? How do we mark this year 170? Let us all reflect how we want Ugandans from survival to sustainability, from consuming their entire earnings to saving and investing for tomorrow. Financial institutions have a critical role to play. Designing affordable, accessible, and user-friendly saving products, they can make it easier for individuals and small businesses to plan. The PINSCO study, which I mentioned earlier of 2023 survey, revealed that 36.4% of Ugandans since financial services through village savings and loan associations. I think most people refer to VSLAs, indicating that community-based saving and investment groups continue to play a role in financial inclusion. Working with financial service providers and government partners, people to support these groups in transforming from informal to formal institutions. Is vital to integrating community segments groups into Uganda's productive economic sector. We also, as Bank of Uganda, encourage financial service providers to continue leveraging emerging technologies to promote innovation, especially with digital platforms. Schemes and products and new financial solutions that promote sustainable livelihood. Critical, given the technology has been proven as a major enabler. I'm not sure how the sandbox that Bank of Uganda has, whereby young, old, and planned adults, as I've come today, and test your products. So please utilize these opportunities. So if we spend time and we talk about sustainability and green finance, we have something that is coming into the market, which is called Sustainability and Green Finance Awards. And in the spirit of promoting sustainability, I, the governor, pleased to announce that this year's celebration shall be so including sustainability and green finance awards. Recognized institutions that have excelled in executing financial health from finance to sustainability. The award will be aggregated for greater visibility and presence, showcasing the sector's collective commitment to financial stability, sustainability, and environmental stewards. So we are going to have an award, and I hope each one of you will participate. Participating institutions will have the opportunity to nominate beneficiary plans or initiatives that exemplify innovation and impact in sustainability and green finance. Through these awards, we at Bank of Uganda aim to encourage financial institutions to champion responsible finance. And in addition, we hope that it will result into environmental protection and long-term community resilience. Now, what is the saving challenge that we have? We continue with the revolving giant savings box challenge at Bank of Uganda among participating organizations. This exciting initiative promotes enhanced savings culture while advancing the financial health aspect from earnings to sustainability. This will support a campaign that the Institute is running, and this challenge has been proven to be not only a symbol of shared commitments, but also a tangible driver for collective savings and community impact. Equally, is something that we would like to mention is the collaboration between the sector, between the regulators, ministries, departments, agencies, financial service providers, civil society, and the media, and just to mention on the public, to ensure that our not financially left behind, but are included and also financially healthy. To every Ugandan listening today, as a governor, I urge you to take a step towards your own financial health. Start by setting aside a small portion of your income, no matter how small, save it, or no matter how modest. Time, consistency will build, and it will build a culture, and this will ultimately support resilience. Remember, and I quote, savings is not what is left after spending, but is what is set aside for spending. I'd like to repeat that, you can quote it. Savings is not what is left after spending, but it is what is set aside for spending. As we celebrate the World Saving Day today, let us affirm our shared commitment to building a financially resilient Uganda, from short-term survival to long-term security. Our Uganda Vision 2040 sets a target to raise our national savings from 14% to 35% of GDP. In simple terms, this means that for every 100 shillings that our country produces, we should aim to save 35 shillings for the future. Achieving this will require all of us, individuals, families, institutions, to embrace the culture of saving as a foundation for investment, growth, and self-help. As I come to the close of my remarks, the Bank of Uganda reminds the public that it remains steadfast in its commitment to a stable, sound, resilient, and inclusive financial sector that supports socio-economic transformation. Together, we can ensure that every Ugandan has an opportunity and capacity to thrive financially. Thank you all for listening. I wish you all celebrations. The Governor Bank of Uganda. Thank you. So at this point, I would like to governor. Thank you.
But at this point in time, can I now request the governor to ascend to the stage so that we can unveil the campaign and officially launch it and sign it off. So governor, please move to the stage so that you can unveil and then we can start the sign off ceremony. So finally, the unveiling once the brand comes out on the count of 3, 2, 1. On the count of 3, 2, 1. Can I request all of us to rise? Can I request all of us to rise? Well, I think we didn't put the right of the brand, the right of the one. 3, 2, 0. Your signature. Invite our chair to join. Invite our CEO to join. Invite our fans for the video. Invite us. I will have my president to join as the CEO of the Forbes. CEO of the, I want to invite the CEO of Exim to also. Insurance regulatory authority. Part of the guidance of those. I'm a signature and insurance training college. Anybody with a private bureau association? Or. The Uganda Business Association represented by President Dan. And principal. I know. Bishop and these signs. I explained to be that level first see how we use on the stage. Governor is out on the stage. Governor comes to the stage, regulator is coming to the stage. So that's the campaign. So well, that's the campaign. Yeah, I want to let me know why I don't just believe it. Yeah. Right, so I was, our CEO, certainly vice president, come and join me. Is I will be joining this photo, and after that photo, you will append the signature. My apologies.
Donna, I did it, I do recognize and apologize that we don't have recognized Director Shafi. He has actually played a critical role. He connected us to FBI Finance, who has been a partner for a long time. Director Shafi, we appreciate. Please clap for that.
All right, thank you very much. Director Shafi. Between you and because you're friends with your son, I sometimes forget that I have to recognize you know that our relationship is strong. Very good. So ladies and gentlemen, the program is going to get started in the next minutes session that should not go beyond that. I want to briefly invite our moderator for the panel, Patricia, to invite the panelists right on set stage of this conversation. Thank you very much.
Good morning once again. So we're going to have a short 30 minutes discussion. And at this point, I want to invite my panelists or panelists, starting with a representative from Bank of Uganda who's not at her seat. As a way for Justine to make her way, can we have Dennis Kizito from the Capital Markets Authority? Round of applause for him as he comes. Welcome. We also have Dr. Julia Olima Oyet from the People Development Fund, the CEO herself. You're most welcome. From the Uganda Retirement Benefits Regulatory Authority, UBRA, Ms. Daisy Davakosa, you're welcome. We'll also have the Insurance Training College, Mr. Samuel Magala. Join us for the panel, you're most welcome. And then Bank of Uganda, Justine, please join us at the stage. Oh, the men on one side, good. Thank you, Dennis, for that. Right, so I want to give our panelists one, introduce yourself, the institution represent 1 minute, not the whole text. 2 sentences. With Justine from, Justine.
Thank you, Patricia. My name is Justine from the Bank of Uganda. I am the manager of financial literacy working under the Financial Inclusion Division.
Steve, you're welcome.
Okay, thank you, Patricia. My name is Julia Uyet. I'm the Chief Executive Officer of the Deposit Protection Fund, and I'm happy to be here. Thank you for inviting me. Great, yes.
Thank you, you're welcome.
Samuel Sendumbe Magala, Managing Director of Research and Grants, the college, and I am delighted to be here today.
Thank you, Samuel.
From the Uganda Retirement Benefits Regulatory Authority, Head of Supervision. Welcome. Finance.
Sizito. I am the Director, Market Supervision at the Capital Markets Authority. I'm happy to be here and thank you for coming.
You're almost welcome. So we are going to have a conversation around the theme, financial health, earnings and sustainability. And in the interest of time, I'll ask about the questions person and then we'll open it out to the audience. And then I'll give you a few minutes, just give your final closing remarks or parting shots, and then we will sign up for the rest of the program ahead. So I'll start with Justin from Bank of Uganda. We're talking sustainability, banking sector. Would you kindly share what the status of ESG implementation within the banking sector?
So, thank you, Patricia. And I believe ESG has mostly by you during your opening remarks and by Goretti, but I will add. So ESG really, like you mentioned, is a very critical component for the Ugandan banking journey. When it's at the Bank of Uganda, it could be about compliance, but it's not. It's really about shaping a resilient, inclusive, and sustainable financial ecosystem. And it's what we are all looking at. So for me, looking at the banking sector, trying to see what financial institutions are doing in the aspects of financial environmental footprint, looking at social responsibility, the governance aspects. And I think we've made tremendous progress, which was led by the Bank of Uganda and UBA after the launch of the framework that you talked about in June 2024. And this came or stemmed from the commitment from the UBA members. We saw the CEOs signing commitments to include ESG principles within their strategic plans, within the risk management systems. And this is what is driving ESG right from the boardroom to the operations in the branches. So a lot is being, today we are seeing banks reporting on ESG principles using the standardized templates that were put in within the framework. They report to you, of course, UBA periodically. You send Bank of Uganda the reports and they are well received. Bank of Uganda reviews them, makes recommendations. And I must say that right now, during the on-site inspections, these reports are used during the validation. When a bank states that this is what we are doing, when we go out there to inspect, we use those same aspects that they doing and we find out if they are actually doing that. You spoke about capacity building, and with the partnerships that we are all talking about in the SDG 17, we've seen partnerships between ABI and the institute, UIDS, UIDFS, many of us, in aspects of reporting, in aspects of climate risk, and all this is helping us implement the ESG principles. Most recently, we've seen the launch of the climate risk guidelines, which is also going to enhance how we report the ESG principles. So basically, the implementation is not going without hurdles. Like we've seen in the UBA report, some of them, you mentioned them. Most of us have not grasped the understanding. There's a lot of inconsistencies in the reporting. Yes.
Thank you very much, Justin. Ladies and gentlemen, and just to add, so the framework as it is has got 4 pillars. There's a pillar on ESG governance, there's a pillar on sustainable finance, there's a pillar on risk management, and then there's a pillar on reporting and disclosure. The pillar that is doing very well is the one on total rates. Which one? No, there's a people that are very well within the financial system. Governance, governance is doing very well. Have the board oversight policies in place. The one that is doing once, I think I have listened to it, is reporting. Reporting is really doing very badly, but rightly so because of the knowledge gaps, but also the capacity gaps among the financial staff, which we are working on. We did see that journey is 1 year down the road. We are noting each of these gaps as they come up. And together with Bank of Uganda and the government partners, we will get there at some point. So thank you, Justin, for those submissions. I want to come to Dennis, capital markets. Investments, I'm talking investments here. What are of the simple, I don't know if it's a simple, but let me say investments. What are some of the investment options in the capital markets that can help people achieve financial stability and independence? But verify whether it's simple or not simple.
Thank you so much for that question. I've always been blamed to be complex, a complex subject. And we are undertaking awareness campaigns to demystify that perception. So I think the question was phrased in that spirit. So how we talk about the four capital markets products, which are investments. One is, I want to just clarify where it should belong. That is the bond. Most people, and I think most of us in this room, are accountable for marketing the bond as a banking product. That's not true. In fact, if you in doing that, you are also accountable for mis-selling. The bond is a capital markets investment product. So, and I think most of us have invested in bonds, and maybe that's why it's becoming day by day a more simpler product. So we'd like to say now at this moment that a bond is a capital markets product, and it is one of the simpler ones, one that can guarantee you a predictable for the coupons or returns or interest after 6 months. You put your money aside as low as 100,000 shillings, starting from 100,000. The upper limit is not defined. You can invest as much as you can. And with support of government, maybe allocation of this, I know we are running behind time. We are soon introducing a bond product, again, in the interest of making a bond more simpler and understandable. And this product is called Op Saving. It comes from the project Op Saving, which is an initiative of Ministry of Finance, which is made to democratize, make the bond investment opportunity available to every Ugandan. So soon each Ugandan who has 5,000 is going to be able to buy the bond. We're not going through the nitty-gritties, but just that soon each Ugandan who has 5,000 on their mobile phone are going to be able to buy a bond in Uganda. The other one, allow me to mention this as the last one, is what we call unit trusts or collective investment schemes. These ones also someone who has as low as 5,000 shillings and join other Ugandans who contribute to this money that can be given to one or one licensed persons, and that is the unit trust manager. And this manager will give this money within the capital markets and earn a return, which return is distributed to the other members who are contributing to this fund or the unit trust scheme. In fact, if you have some money aside of savings, you can put together this money and give it to a unit trust manager, and the manager will give you annuities at an average interval. Thank you so much.
Okay, thank you, Dennis. We take the soon product is coming out in order that is. Soon, okay, we take note of that soon. And thank you for the submissions on that, as well as the unit trusts. I'm sure most of us here either know or have who are customers of unit trusts. In that space. I want to move to deposit protection funds, Dr. Julia. Deposit protection fund, yeah, the adverts. 10 million should be, thank you so much for the protection. But please share with the audience, the role of PPF in supporting the last mile customer. I think financial.
Yes, thank you, Amita. And the question that you've asked is very pertinent to the EPF, because the Deposit Protection Fund is actually designed to protect that last mile depositor, the small, unsophisticated, uninformed depositor. And when it comes to financial freedom, there are many aspects, but I know for you to feel financially free, you need to be confident that where you put your money, it is safe. And that's where the PPF comes in. We protect your money, and that last mile depositor is a small depositor, we protect them fully. In Uganda, out of all the depositors in the country, we protect 98% of them fully, meaning that they have less than 10 million shillings in their account. And so that's how the Deposit Protection Fund is contributing to ensuring that the last depositor has that financial freedom. The other thing is that the Deposit Protection Fund ensures the last mile depositor in the most convenient ways through the mobile money apps or the phones. So we get information from your bankers about your mobile money number, we verify that with your national ID, and as a last mile depositor, and if it's unfortunate that your bank, you don't have to move anywhere, you get that money wherever you are on your phone. The other support that we give the last mile depositor is to be able to let them know that they are protected, because if protection is there and you don't know how when we are out there in the field, financial institutions, payment service providers are being blamed for being the ones fleecing or scamming. There may not be scammers in this room, but maybe there are some out there. So our role is to protect the consumer. Predatory lending, exploitation, fraud, and scams. We do all that. We are also in charge of building up the curriculum that we do for financial literacy. Recently, we are being encouraged to include sustainability within the curriculum. That we will see how it goes, of course, through the collaboration. We are sure that is a very important aspect that we must include within that curriculum. So consumer education is what we have to do right from the grassroots. We need to come out of the planned kid to the planned adult. So we are ensuring that also these curriculums are going down to the grassroots. We embedded these curriculums into schools, right from primary and lower secondary. So not only Bank of Uganda as a regulator, but regulators, financial sector regulators, we need to come together, we need to educate masses. It is our responsibility to do all this and also monitor what we do. There's a lot we do, but we do not monitor. When we monitor and evaluate, we are able to understand what has worked, what has not worked, and make informed decisions to improve and ultimately have people financially included, because I'm sure if someone is financially literate, we will have them come to the financial sector, which Julia has mentioned is 98% protected from keeping money in the box at home. Yeah.
Okay. Thank you, Justin. Also, over that, in terms of the literacy, let's answers, being not living in Uganda and being high, perceptions of the strategy or that are very embedded an aspect of the so many languages that we have. Well, we speak English.
We are not speaking to the people in English. Daniel is here. The people we have trained and who have come up with the Financial Literacy Association speak different languages. And if you give him a chance, he will tell you we have trained people who can speak over 54 languages and are down there taking on the message in the different languages. Those are trainers of trainers.
All right, thank you very much. I come to Dennis, capital markets. Why is it important for everyday earner to understand and participate in the capital markets as part of their journey towards financial? Why should I do this?
Thank you so much. The straight answer is that we need to cure the dysfunctionality in our economic system. And the dysfunctionality is about people not participating within capital markets. Today we are talking about savings. I don't know how many times the word savings has been talked about in this forum. Many. And few times have we talked about investment. But if you understand savings, the entire savings cycle is never complete without investing. And that is systemic within the way we as financial sector players do our work or our responsibilities. We tend to work in silos. So because someone thinks that savings are savings and they don't look at the other leg of the savings process, and that is investment, you find that we are not going to be so much motivated to look for better earning opportunities for these safety monies. Now, it's for any properly functioning economy. How does it function? It has two major pillars. One is what we call the surplus spending units on one side. On the other side, we have what we call the deficit spending units. Let me try to break down these two terms. We are all here and we are employees in one way or another. We earn from service organizations, maybe some from manufacturing organizations. Those are our employees. At the end of the month, they pay our salaries. And like from the governor's speech that you start by saving, and then you save. So when you save those savings, because you are a surplus spending unit, you are supposed to pass on those savings. And these are units which need capital. So these things should not be put somewhere like some people run like you had one of the panelists say, some people put them under their mattresses. When they come to the bank, some people are good. Money is not moving out, and we all know that it's called currency, basically for one purpose, because it should keep moving to earn interest, it has to be invested. So you find that there is that dysfunctionality, savings seem not to be moving to the right hands, and those are the deficit spending units. And the movement from the surplus to the deficit spending unit happens within the capital markets. So what is happening right now is that we have very few investors within capital markets because we have not paid particular attention. The fact that savings are savings, but they have to be invested. So we should be talking about savings and investments. Saving and investment. You should get this into any person who wants to invest. To say that saving is not alone, it goes along with investment. Today, the government told us that 70% of Ugandans spend more than they earn. And we take in time to understand why. Because usually when you save for a purpose. You don't save for you to be lacking the following day. You save, you put aside this money so that this money can earn enough interest to help you spend the following day because prices keep moving. Now, not to give a long-winded answer, let me talk about 3 statistics. In Uganda, currently, the lending rate is at, Edward knows, 17, Kenya is 15, and the US is 7. Why are these lending rates different? You can say, okay, for the US, it's different because it's a diverse economy, totally different geographical and political scenarios. But let's look at Kenya and Uganda. We can identify why are they lending at 15 and we know why it has gone to 15, it used to be lower, and for us we are at 17. The difference between the two is how developed their capital markets are. Because capital markets should be used to mobilize these savings, and these savings can be channeled to other participants, that's like the banks, so that they can lower, because they're getting cheaper long-term capital, patient capital, they can be able to lower their interest rates. So you find that we are lending at higher rates because the capital markets are dysfunctioning because of low participation. And the prices, the business are going to be selling their products are going to be higher, and you find that we are spending more than what we are earning. So my goal, as I end my answer, for you to ensure that as we save, we invest, and we invest in the appropriate sectors of the economy. That's capital markets, and then give some of these matrices. I thank you.
Thank you, Dennis. Ladies and gentlemen, we turn the call, save and invest. Dr. Julian, let me come back to you. One of the reasons the unbanked confidence the bank process. How does deposit protection help individuals improve confidence in banking to ensure long-term financial security?
Okay, thank you very much. So it is true that a lot of the would-be depositors have decided to keep their money in their houses, in their pots, in their funds, because they don't trust the banking sector for one reason or another. So what the Deposit Protection Fund does is that we give information, we go out, we have invested in public awareness. The depositors know that if anything happens to your bank, you will not walk away empty-handed. At least you will get up to the 10 million shillings. And of course, the question is always asked, what happens to the money after the 10 million shillings? There you have to wait for the liquidator to sell the assets of that bank that has collapsed, and it will be paid to you. Only that it will be a bit later, and then sometimes it depends on how much they have recovered from the assets that they sold. So giving that information to the public is very important, because then they know that they are protected. And one of the ways in which we give this information is training the staff of the contributing institutions, especially the frontline staff. Those are the ones who interface with the depositors, those customer consultants. So we have a program where we have online meetings with them very early in the morning before their banking day starts, and explaining to them the benefits of the Deposit Protection Fund. That information then gets out to the public, hence deeper confidence in the sector. Also, we keep regularly updating on our website the list of those institutions that are regulated by the Bank of Uganda and hence protected by the DPM. As you can see, our mission there says that we foster public confidence through protections of the by the Bank of Uganda. So every now and then, we send out a list of these institutions so that the public then knows that if I bank with this particular institution, I get that protection. We need to ensure that if we promise our depositors that we shall pay them and pay them fast, talking has to happen. So internally, we ensure that we invest in systems that help us to get that information Patricia was talking about, your information, use that information to be ready just in case an incident. Pay you the right amount of money as fast as possible. So the other thing that we look at, we are trying to create that confidence in the sector is ensuring that we pay you in the most convenient way, which would be like I had mentioned earlier, that mobile money, or if you have another account in a sister bank or in another bank within the sector, if you gave us that information, we can be able to pay you through that other institution just by transferring your money. And so when the public knows that yes, I'm protected and I can get this money paid to me, that makes helps to contribute to that confidence. And then of course you can't say that you pay when you don't have money. So just to let you know that the Deposit Protection Fund gets money from the contributing institutions, they pay us premiums, very similar to insurance. When we get this premium, like my colleague from indicated, we invest in the capital market. So we invest in treasury bills and treasury bonds. This earns us income, and so I'm happy to say that when the depositors know we have more than 1 trillion shillings in our account, and we can pay. That's the confidence that we want to build up.
Thank you very much, Dr. Julia, for that submission. Speaking up from Dr. Julia to come today. I know Dr. Julia said investing, capital markets are people coming now to benefits. So the push is about the push for sustainability, ESG, and it's not just a push from the sector side, it's also a national push. How is UGA guiding the investment mandates of retirement benefit schemes to ensure that this large pool of capital is strategically channeled into sustainable, high impact domestic projects?
Thank you, Patricia. You know, when someone says ESG, looks like it's a new kid on the block. But we have been at this ESG thing since we started the financial sector. Was not that about participating whether in banking or insurance, the capital markets, whichever way you are participating, we start being at this ESG talk or practice. How? Without even amending our regulations, we already have investment regulations as a regulator for the retirement benefit sector. And in that regulation, it's already detailing this classes that a retirement benefit scheme is allowed to invest in. Already at the sustainability component. And for us, we go beyond just the ESG and even as a scheme is developing their investment strategy to ensure that the members are actually going to go with what they have put in. Now, already we are in that space for sustainability. So as you say, that's what you see at the end of every year. There is that AGM where they declare interest. And if I took a poll in this room, how many of us know of balances in our scheme as a big? For many people, they have stopped at June. Yeah, because there was an AGM, or they stopped at last year, December, depending on when your scheme reports. When they told you that you have 20 million in the scheme, you said, I have my 20 million, it's there. So today, I'm leaving, Stanley, go out, or whichever institution, I know I have my 20 million. And that in the next, 10 months now, because we'll also cover October, so I already been paid. It means the contribution already come. But for many people, they don't even check that. So the beginning point for us is, as a regulator, we already have a regulation that requires that a scheme, one, will have a professional to manage their assets, and this professional being licensed both by Woodland CMA is someone who is professional in investment management as a bare minimum. That's a starting point. Then when you look at the framework under which they are investing, each scheme will have a unique strategy. But what are they taking note of? They're taking note of their membership, things like demography of their membership. If you have more women between 30, 28, 25 and 30, for instance, they will simulate the possibility that this person may get out of work to go and take care of family. If you have both the 50-year-old, the strategy has to be the fact that this person in the next 5 or so years may be exiting. What do I have in place? That's already in the regulation. And beyond that, we are now going into the ESG that we are talking about, especially the ones related to environment and of course governance. We have started having training for our trustees to factor those in. For example, we have some schemes in their strategy. They've been very express that they will not invest in BAT. Even if the BAT shares went up today, they don't invest in BAT because they have already factored in the environmental components. Yeah. We also have schemes that are now looking at partnering with private related finance institutions. We're driving into our private equity investments, and schemes are saying, can you be better at evaluating this private equity? Because it's been a challenge in our space, and the regulator is working most in that space together with us to make sure that as someone comes in to invest, if it's a private equity investment, where is it investing? Who is it investing in? We are even going to support the capital markets as they launch their product related to Islamic capital markets. If you find that you have to also now tell this scheme where they're targeting women, can you actually have the money going to women? If you're investing in women and women-led private equities, are you actually putting it in there and do you see what you are getting back? That's the direction already we are taking. I talked about awareness. We also have an initiative currently being worked on with other regulators. In that initiative, we have Bank of Uganda, Capital Markets, Uganda Securities Exchange. And the idea is, can we formulate a framework that also to have those special bonds, they'll still be bonds, still be a government security, but which allows these retirement schemes to know which government they are targeting. I think you've heard about NSSF discussing with government about funding the one from what's that place? Mukono, place that had the issue of that's no, the Genius Express Highway or the part of the budget website, yeah. So if we're that we have this pocket of funds that we are sure it will be there for another 15 years. But give us a product where we are sure it will be targeted, but still ensure it is a return to members. Because at the end of the day, sustainability for our members is paramount. We're also looking in that direction to have targeted financing, but it requires all hands on board. You know, there's actually with government, and then you go to the schemes, and the schemes say, don't want to put our money in those investments. But also to share a little of our statistics. Currently, the retirement sector has about 29 trillion shillings, and about 76% of that is in government security. That's already long-term investment. Yeah, and it's not in government securities, 1 year, 3 years, we're looking at 5 years and beyond. So we already see our direction going forward, the long-term capital investment, especially for our governments. Thank you much.
Thank you very much, for that information, Chair. I want to finally come to Samuel before we open it up to the rest of the delegates. From the IBC side, why is insurance important for turning today's income? In some long-lasting form of security.
Okay, insurance is extremely important because it is the protection mechanism. Yeah? In the sense of, say for example, if it's a typical question that basic as if I have a bad sense of feeling and I lose all my road, how do I bounce back? The following one and the following season. It is as basic, it's as basic as that. That would be a farmer, and for all these other investors, here, structured purchase fire, I have a loan that I have to pay, and so many compensations that I have to make, and maybe some of my staff and that kind of thing. How does insurance companies to provide this kind of guarantee mechanism to ensure that when I am exposed to a particular loss, then there's some of it who is there to control me in case of loss. And looking at the statistics, again, we refer to Operated's presentation today. I think the FinSpot study revealed that 9 out of 10 people in this experience unknown, unprecedented unprecedented loss. So what does that mean? That's where insurance comes into to play. But I think also try to align that question to the whole issue of sustainability that we are talking about today, is that we are looking at again, thank you very much. Your presentation was quite insightful, but you also shared the stories around these people who are degrading the environment. These people have been financed by us, and I'm very sure those loans have actually been insured. So how does, for example, insurance come in to say, okay, now, how do we protect the environment? Things are basic as that, I mean, if you are investing in a project of that nature, we're either not going to insure your business, Or if we are going to insure you, we are going to insure you at a much higher premium. Just to bring also this to maybe home to even the people in this room. I mean, I have a very tight, so I'm not a candidate for this. Not that. For those of us who are upset in those very huge combustion engines, what do you do to the environment? Okay, so as insurance, how do you handle to say that you are driving, for example, a combustion engine? Then the premiums that you are going to pay to insure that car are going to be higher than somebody who's driving a hybrid engine or even somebody who's driving an electric vehicle. So I think those are the conversations that we should be having now as an industry, in the sense of trying to protect ourselves as an economist.
All right, thank you very much, Dennis, for that. Sorry, Samuel. I want to open up 2 to 3 questions, just 3 questions, your name, your question, your directing the question. Don't make it a story, just summarize it. And then we'll have our panelists respond. And be out of the stage in the next 10 minutes. Do we have any questions? Yes, Daniel, 1.
Thank you very much. This was the amazing insights you've given us, and thank you very much, LNDFS, for this opportunity. My name is Daniel Ayeware. I am also of Uganda Financial Literacy Association. As you can see, you are doing well because you're a good child. Everyone wants. So Goretti has spoken very well about us, how they have supported us to be where we are. You can see how my host Justine mentioned me by my first name, and certainly TPF up to markets in here. I just wanted to, mine is not a question, but it's a call to the struggle we are in. I call it a struggle, because all this conversation is about one challenge, poverty. And all of us have been affected by poverty. And we are all at levels where we can contribute towards this struggle. As already said at the fundraise, financial literacy is not just at the base. It's not just for the village. When you hear illiteracy, people say, I have a PhD. No, it's at all levels. So I'm calling upon you that level. You might be a very good treasurer in the bank, or you might be very good in operations in the bank, staff or insurance. If you come and attend our modules here, you will understand how far you are. When I attended the training, I've been in banking for 12 years. And after the training, I realized I know only less than 10% of what I'm supposed to know. But the beauty is that if you join us as the association, we get trained here and we continue to have upgrade in this. So it's not just for you, it's easier for us for you to also train the communities within you. Sometimes we all deal with this issue of poverty together. So I just want to thank you for this forum and continue to call upon you members to join us. Once we are done with the politics, we are going to continue with the struggle which is here to stay if we don't fight it. Thank you.
Okay, thank you, Daniel, Chair, for the Kalango. We've got it. The next question.
Good afternoon, everybody. My name is Lydia Mirembe, and I'm from Ubra. And thank you so much, the panelists, for educating us. And I'd like to seek further education from CMA, both for personal education, but also for the members of the public who often pose this question when they attend Ubra webinars. And it's about investing in bonds. You just mentioned that somebody can invest as 100,000 as an individual. If I have 100,000 in my account, I can invest However, every time we talk about this investment, that people on the retirement members say, members of the council say, that they usually want to participate, but nobody picks their money. Is it because it's very little? Is it, I mean, and how can we ensure, how can CMA help to ensure that everybody, whether they have 1 million shillings or 100,000, it actually happens? I've had questions a lot of times of our money wasn't paid. We bid it, but the money was not paid. And then somebody said, go to the secondary market. How does that work? And the other question is, with our bonds and unit trusts as the investment option. Nowadays, even my cousin, deep down in second year, he knows it's all about unit trusts. And there are no risks. We don't seem ever to talk about that side, the other side of unit trusts and bonds. What are the risks? Such that when I next have my webinar with the Uber stakeholders, I can talk from a more informed perspective. Thank you.
Do we have one last one? Okay. Oh, okay.
Thank you very much, the panelists and the moderator. My name is Violet Asimwe from Nkumba University, and I head the Department of Accounting and Finance. We are partnering with the Institute of Banking and Financial Services and financial literacy, professionalism, and research. I have 3 questions actually. I'm going to make it brief. This goes to Justin, Bank of Uganda. You have mentioned that there is quite that capacity regarding reporting and disclosure by banks. And I like to think that probably ESG is an affair, a direct affair in the Bank of Uganda and banks, especially when it comes to what goes down to the communities. Like we don't give, the banks may not give the right picture that comes from the communities, and yet the reporting has to come from there. So I'm wondering, what strategy is Bank of Uganda using to directly deal with the communities rather than wait for the report that comes from the banks? This comes to Capital Markets Authority, and you're talking about the awareness campaign. I would like to also believe that there's a lot of money actually lying idle regarding the informal sector operatives, and yet there is very little inclusiveness coming to capital markets administration. I'd like to know what CMA is using as a strategy to make a typical Ugandan believe that investing in tomatoes, where they've already made that regulation, like you investing in tomatoes at 10,000, and after they sell, it's going to give you 20,000 extra. Many people down there in the informal sector don't actually understand this because they believe it is something with a formal sector. So what are you using to get down to the grassroots of these earners? Thank you. Thank you very much. I also talked about a strategy where you are bringing down something to the women. I think there's a part of this population that you're actually ignoring, and that is the public sector. I know the banks are already on board, but the institutions, I actually belong to the education institution, and I would like to believe that so many people in there are very, very active, and yet the institutions have thrown them out. This money comes at retirement, but it is not used properly. So between 2 to 5 years, these people are poor again. So how would you make sure that that there are people beyond 60 and actually continue probably saving and are making this money very useful. I think there's a lot of there's a lot that has to be done with a financial literacy. You can give them money at that age, but you are not probably following up to see what this should be used after that bills are done. Thank you very much, Sami.
Thank you very much. Finally,
Thank you so much. My question goes to CEO of TPL.
your name?
My name is General Mingo. Now, mine is to seek guidance. We have people from communities that come to our page, the bank open accounts. But you realize that as we try to get the alternative mean of payment to be cultured under TPL, some of them give us mobile numbers that are not registered in their names. And indeed, actually, when you invite them, they will tell you that's what I have, and we have no option, we actually go with that. So kind of if it's okay, we continue going by that approach. And what will happen at a time if you find out that the number against which this person is going to be paid is not in his name. So what should banks do in that regard? Thank you.
Okay, step goes. Yes. Sorry. Thank you, dear panelists, for those insights. My name is Farida Nakato. I'm a lecturer at Makerere University Business School. Today I'm standing in big shoes of the acting principal, Associate Professor Rachel Minga Katorogo. And as most, we have an MOU with the Institute of Banking and Financial Services. We really appreciate the Institute for its continuous trainings in enabling our students to become financially literate. And on behalf of the Deputy Principal, I would like to reaffirm our support, continuous support to this team. And we are also open to collaborations with other stakeholders to ensure that we extend financial literacy between. My question to Bank of Uganda, Post Protection Fund, Dr. Julia, and maybe Bank of Uganda. You find that majority of Ugandans with the supplements that are outside the national system. The collaboration in the deposit protection and maybe UMRA and the Bank of Uganda to explore mechanisms of how to extend deposit protection to even the informal sector, the informal savers. Thank you. Thank you, Farida. Let me start with Dennis.
Thank you so much for the questions. I will try to attempt them one by one. The first was to do with someone who has 100,000 shillings. They put in a bid for government bonds, but their bid was not picked. This is common for me. I'll reach out personally so that I can pick the details. Because that's not supposed to be. Shouldn't happen because the minimum bid ranges between 100,000 and 200 and 1 million. So I'll pick it up with you. If you can provide me with details, I'll go back and play my regulatory role and follow up. Okay, thank you. Then you asked about the risks on bonds and unit trusts. And I made a comment that why do we tout more, make a lot of noise about bonds and unit trusts. Why we do that is because our capital markets are at a, for lack of a better term, a nascent stage, very young. And when the market is very young, usually you want to create confidence with the market. And if you want to create confidence, you better market those products which we designate as risk-free. Risk-free in terms of their futures. So that's why we are making a lot of noise about bonds and unit trusts. We also know that the current ones we have from in the market are from government. And usually government is a risk-free borrower, because even if one government changes, another government comes, the other new government will have to pay the obligations of the previous government. Okay, then the unit trusts, there are so many safeguards for the unit trust product. To the extent that you've not had any single Ugandan lose a single shilling in a unit trust investment. Allow me to briefly talk about those safeguards. One is that we have professional managers, but apart from them being professional and licensed, we don't allow them to get in contact with the investor's money. The investor's money is kept with the custodian. The professional manager deals with it, advising the custodian on where to place this money so that it can earn good returns for the investors. Those are some of the safeguards we have. Maybe I need to talk about that. Maybe some of you don't know is that whichever unit trust scheme we have in this economy of ours has got a trustee. The role of the trustee is to ensure that the rights of the savers in this scheme are lifted, and ensure that the assets are kept to properly benefit all. So there are so many places that the trust, so many places that opens, and that's why we want to put those products for now, as people pick interest and develop confidence within the market. The other question was about awareness campaigns and the role also of inclusivity within the capital markets. That's true. As I talk, we've not yet done 1 million Ugandans invested in capital markets. But if you look at it, the problem is a sector-wide problem. The banks, Bank of Uganda will tell you the same about the figures that we are talked about. I think even for the reason's sake that I can talk, because the statistics are still fresh in my mind, of the 2 million savers, only 850 are active. Of a population of about 16 million expected savers, only 850. So we've done at the sector-wide level under what we call the umbrella body for regulators within the financial services sector, is to come up with the concerted efforts to ensure that we carry our public awareness campaigns, the benefits that Ugandans are missing out within the public, within the financial services sector. And we are making progress, and you hear more words from us. Thank you to partner with us. Lastly, it's about the strategies we've put in place. I talked about one, that is the public awareness campaigns. The other is to introduce inclusive products. Maybe because we are talking about sustainability, let me include the word socially inclusive products. When you look, I don't have enough time, but when you look at the unit trust product, it's a product that can reach the last man. We are now talking about someone investing as little as 5,000. This explains some of the efforts we are taking to ensure that we increase the levels of inclusivity within the market. The other that I mentioned, we have obsessing it. We have so products, they are soon coming to bring all our brothers, the Muslims, who don't want to invest in interest-bearing securities. So we are really at it and we just build and you can join us wherever you can so that we can increase the levels of inclusion. I think that's it. Back to you. Thank you.
Okay, I think it was one question regarding the use of benefits, someone actually receives the benefits. I hear you, but thanks for that. We have certain initiatives that have kicked off in our space. Now scheme providing products that allow Daisy at retirement to, for lack of a better word, elongate access to this money. Let me explain. So if I'm getting, let's say, let me wish for 1 billion shillings. So I get my 1 billion shillings from whether NSSA, Oprah scheme, or whichever. There are now schemes that allow me to continue, to deposit that 1 million with them and draw a plan for me to draw down while they continue saving for me, also continue investing for me. What that means that outside the 2 or 3 years, I can now be able to utilize this money over a 10 to 20-year period. This person is continuing to invest for me. If I provide with them quarterly drawdowns, certain amount, they intend to ensure I can get that money over the period we have agreed. And the shortest drawdown is 10 years. So essentially, it's already allowing this person to make a decision on what they want to do. We also have schemes, I think currently it's one scheme that has embedded, 2 schemes have embedded annuity products in their schemes. Basically, they're saying, instead of you taking out the 1 billion, let's give you a pension, monthly pension. For I think pension is what most of us understand. On a monthly basis, after calculating how much they can sustain, the amount you're giving them, they'll say we're able to give you an annuity over a 15-year period. And on a monthly basis, or whichever periodic basis you have agreed with them, they will give you this money. Those are insurance products, and currently we have about 2 schemes that have allowed for that. So we can also encourage others to go and benchmark with them and see how they are implementing these annuity products. So that's Makerere University and the Justine scheme. Bank of Uganda has an annuity component for their staff instead of taking away the lump sum. We also have schemes now embedding different products within the scheme to ensure that you can take care of the key social needs for an aging person. Looking at 60 as the starting age for us to age, not 40. Yeah. So finally, you have again 1 billion, but for a fact, as we continue to age, health becomes an issue. So you incorporate a health product within the scheme, in which case you can either start contributing to it while you work, or you can get your benefits and a portion of that goes to that product to ensure that you are able to take care of your medical needs post-retirement. We also have within even regulation provision for transfer of benefits. And here we're trying to deal with the intermittent access. Because we may be here talking about retirement living, but at 55, many of us only have NSSF saved. And yet I have worked with UPRA, I have worked with Housing Finance, I have moved to Stanbic, but every time I am moving, I ask for my money, I eat it. Then I go back to work with Housing Finance and start afresh. After 5 or so years I'm moving, I want my money, I eat it. And at the end of the day, you realize that you only have the monetary saving as the portion of saving you have. So we are now also embedded in our regulations the option for members to transfer their benefits across scheme. What we're doing that for is to ensure that at the end of the day, you're able to have a pot of funds that can actually buy out these products that we're talking about. Just to share the statistics. And I think the one that most of us are contributing to is NSSF. About 95% of us have less than 50 NSSF. On average, they're paying out about between 32 and 37 million shillings to people exiting, and that's at 55.
with a hospital lifespan of about 18 years. What can 50 million do for you in 15 years or 18 years? So one of the products that are coming in is to cure some of those challenges. But of course, it goes back to literacy, supporting the people that have these products to ensure that they are out there, but also having an enabling environment that allows whoever is coming up with a good product that can help us to cure those challenges is actually supported and stated. Thank you.
Thank you very much, Daisy. Then we move to Dr. Gloria, then I'll end with Justin. Okay, thank you, Henry. I guess what's going on from your question. You posed a good question to us. Okay, sometimes your customers give us numbers that are not in their names. Still collect that information, but let them know that the time of payment, because we have to verify, they'll not be the first customers we shall pay, but we shall use that number to reach out to them to give us the information that can help us to pay. So still get that information. It helps us to reach out at the line. When we finish with the easy customers to verify, but encourage them to give you the ones that are registered there. The other one was the lady from Smokes here. You're asking about protection, and I give my colleague also to throw in a word there. So you mentioned informal savings being samples. How you describe informal savings. So for me, I would say sample is not informal. Samples are also registered, they're licensed, and they're also supervised. Although it doesn't fall under the TPF, it falls under UMRA. UMRA now is under the Ministry of Finance. So the last time I had an engagement with them, we were looking at also developing a protection scheme for their safeguards in the sample. So we hope that the government continue in that move. Of course, if you're looking at a real informal saver, the people maybe who keep their money in funds, in pillows, it's hard to reach and it is too risky. So that's why we really need them to come into a formal space so that they can benefit from the protection that is given in the country.
Thank you, Dr. Julia. And final, or not final. Thank you. I'll start with where Julia stopped on the informal survey. And thank you, Farida, for that question. So informal surveys are really out there, and mainly in the PSLs, like the governor mentioned in his speech. What is the Bank of Uganda doing? We are majorly partnering with other institutions such as CARE, and CARE is helping us bring these informal savings into the formal sector. There is nothing I can say that I know about creating a scheme like DPF for the informal savings, but I know CARE has partnered with institutions like ABSA and PALMA, and they are bringing those savings into the formal sector. Moving on to Viola's question, which is reporting on the ESG, and I am sure, Patricia, you will come on this. There is a lot of gaps on this, and you stated it. And majorly, I think because of, Daisy said this is not a new kid on the block ESG, but I would say maybe the reporting is a new kid on the block. And we are still building the capacity. Training is ongoing. We've been told that some people are they leave the bank. So that is the big challenge for us, but the training is ongoing. We talked about the ESG taxonomy, and Patricia, you will state if it has been developed. And this is just a dictionary or a rule book on what we should report, what should be included. These are the gaps that some of us, especially financial institutions or even those in the rural areas that have not grasped. So some of the time we find that they do not know what to report and what to leave out. So we think that will help out. Of course, we have the standardized template that is helping us come off this burden. I'll stop there, Patricia.
Okay, thank you, Nancy, that's fine, so. Basically, it's here for us, about the things. Yeah, we started this journey in 2024, June, officially. And before you get out to your neighbor's house, you first sort out your own house, and that's what we are doing as a sector together with the regulator. So the report, we have reported, I think, 4 times now. For the fourth one is coming through for Bank of Ghana. The reports have evolved and will continue to evolve. Why? Because we are walking the journey with the financial institutions, mainly in terms of how do you capture the different parameters or KPIs that are very well highlighted within the framework. Now that's something that you will not report or get a report immediately. It takes time, it takes an element of hand-holding for the financial institutions to report correctly and be able to support their reports in terms of the verification or the on-site supervisions that the regulator will make in that time. So these reports have come. We have a sustainability committee together with partners who are supporting the different aspects of improving, enhancing, strengthening the aspects of reporting, but also most important is understanding what you are doing and how you're going to report about it. When I believe once we have done our in-house capacity building, so to say, we will definitely get out. It's part of the verification that I think Violet talked about. If someone has said they have done this initiative in this community, we'll definitely need to follow up and say where this is, how is it doing. But right now it's what they call creating that enabling environment or that foundation that then enables us to scale up, be better, and also be able to support other sector players. So that's what I wanted to add. In terms of the reporting and the challenges we're facing, we take note of them, but there is effort and will to make the change and to improve and make the financial sector drive sustainability and ESG across their different operations. We have, it is 12:43, MC, Gaba, you're looking at me. There's no land. There's no land. Eh? Okay. Okay, I want to wrap up. I want to wrap up with that. Just give us 5 minutes, 1 minute or less, each person. Your parting shots, and I will start from Justin and come to Patricia. I go out of here as a planned adult.
Okay, thank you, Patricia. I just have short. One is to all of you, please update your information with your bankers. They'll always send you SMSs. Those are to protect you having the financial freedom that we are looking at. The other one, so many of you say 10 million is little. That means that you have more than 10 million. If you have more than 10 million, start knowing your bank. Know your bank. And when you know your bank, get information from credible sources. The newspapers, the Bank of Uganda ensures that the financial institutions publish their financial information. Get that information and read your bank. See, is it making profits? Is it making losses? How has it done over the last year? So know your bank. And the other one, some of you might have relatives who had deposits in the banks that were close to 24, that's PFC. Bank and credit mercantile credit, just in case they're out there, let them reach out to fund. We have the money. And then the other one is just saying ESG that good organizations. But let us not forget that we also have to have ESG in our houses. How are we protecting the environment? And that is why we have outside there a store of candles. They deal with clean cooking, and you should be able to visit them. And just to disclose that it is strongly associated to my own brother. So if anything happens to your family, I will protect you. Thank you.
Yeah, thank you very much. Mine is just a wonderful appreciation. I appreciate the organizers for inviting us to be part of this. And then also we are having our commitment to join this panel. We have been as an insurance industry, we've been trying to put this along, but when you look at what is everything is intervention, I mean, it's the core of so many affairs. We are happy to make a more impactful contribution to this process, and please keep inviting us. We will also contribute both in terms of materials, but also happy to dip our hands in the pockets and make a contribution to this stuff. We need to take
Thank you very much. My parting shot really is in line with the theme for this planned adults, from earnings to the sustainability. But what has echoed from the discussions from earlier in the morning is that we each have a part to play, from information to spreading the word to championing. But on the retirement benefit side, I want to encourage us all to, one, monitor where our savings are. Do you know your scheme? Do you know your balance as an individual? Are you asking the right questions? But also, like the other panelists, to extend that hand that should you need support in awareness, retirement-related awareness. My Lydia is in charge of that component, but also reach out to me. We come and do this with free of charge. Free of charge. Please invite us. We are really excited to engage institutions, individuals, your groups, maybe it's your circle, your investment club. Invite us so that we can embed a component of retirement savings, because that's what gets our unpaid. Thank you very much. Finally.
Thank you. And my parting shot is about sustainability in saving and investments. How could the FinScope report for 2024? There are two matrices which threaten the ambition to achieve sustainable saving and investment. One is 14% savings rate. The other is the 70% of Ugandans spending more than they earn. It's a call upon each one of us to ensure that as we encourage people to save, we should direct those savings to better earning investment opportunities. I thank you for coming.
Thank you again, ladies and gentlemen, for staying with us. I hand back to the MC.
The people that I know, you, we are never really managed. Because your level of presence is where I tell at some point, I started to think that the will not against you in the next 10 minutes. Or that will never be in madness. I don't think it's myself as I went wrong. But you say that this is it. I have to get to step for the next 8 minutes so that we close. And this is how we're going to do this. We have a function of the issue of energy. I want to invite here From the military, that chair, that's what we are doing in the space of sustainability. So please that, so that I give the colleague from the ministry the 5 minutes, and then I invite my colleague at the institute for 3 minutes, and we should be able to comment. So I'm going to be welcome the 3 specialists from the National Clinical Unit. Emmanuel,
It is very hard to speak at this time, especially when people have always switched over after time to another whole panel. But I also want to request, maybe we could just wait until it's in like 10 seconds, then I promise I'll use 5 minutes. Yes. Thank you very much. Like I said, I promise I will use 5 minutes. So with the 5 minutes at the end, we'll just start up and come next to. I think we all share the wisdom and the UPES for necessary that we also become part of this conversation where we need to ensure we come today, tomorrow, whatever. So there's so many things that the ministry does, the ministry of development, whatever. The conversation today, I want to focus on our green cooking program. Instead of we establish the green cooking unit, the coordinated sector, we also ensure that we have some areas to join you, local organizations and investment and people are totally and so I think we have a Lisa and I want that we will go in showing them. Well, you know that we have also very about you know, we consume about 200,000 is very little by going back and over and that we consume in terms of oils. We need to access study and the is changing to clean energy and some of our governments especially the see that it's 75% we should take I want for 75% to 50%, and then we're going to increase the access to clean energy used for food to 50%. In the way of this electricity in this room, because of sometimes we are collecting that. So in the way that we are generating our electricity, we also need to ensure that consume electricity. We now do that, promoting 6 changes and quickly. And what we're doing is the sustainable development. Here we understand the global challenge and quickly, so that's why we use the fuel in a sustainable. We are trying to see what the science is. I really constantly improve. So efficiency, because to ensure that if you are using that to go, you should use the energy. Let's say that you need to have this fuel. So let's say means so we ensure that you know only equipment also ensure efficient. Here we require one. Some use formulas because the equipment design equipment. This you use to cool the water consumer and then one. And we want to do a review of that, also save the electricity, and how we reach it, and therefore, we will like, standards. Before you buy that equipment, you know, the requirement level with each efficiency. The equipment will provide efficiency of material. So if you buy that equipment, in the case that that is why I'm doing that for you. I put you that and that's why I don't want to be before we want to move from food to sustainability. That's why of my favorite of one is the sustainability, economic thinking. I will know from said also some of that you see it like from those joke. I know my own so we are opening to that specific so that is the so that Western environment, I don't think it is level 7 and level 8. We have products that you cannot produce you've seen that close. You are still very well, so yeah, you are doing time, shall be so so also is very good by and you really social organizing. So we are a program that will take on sure. This is what we call that. Some of you use that goals. And then I about that. Now we're working. So even which I is the technologies are very expensive. Some of you think that you have to find that is so is that a thing? No, is that a thing? So there are so many programs this I have one of them I for example, in the economy, we have the government, so the government, so and distribution of we have so the government is a choice that is more accessible and more we put people you access some of these equipment. I don't have affordable course. Then you see that the people Where now the people are. And agency will also appreciate why. These are very we are now carrying communities that if the child has really and we are maybe you are working this no, we don't want you to do immediately. We want to give it to you, take it, I don't like to see the and the money you are the money you have to spend this so agency we have that is also coming up to explain our is technology that we will access them and how recently noted that we released our resolution and environment we are very to have this our finance and then also if you really tax, you just negotiate tax in this incentive side, you're pretty much of this that we are subsidized. Most of these videos represented for those of you that want to some of these technologies, we want to work with there are some exemptions that we are negotiating for. And also, even with now, that recently we are negotiating for institutional value. For some of you that have ones that have institutions, we put up a specific institution and will be able to provide units of the institution. You say units, they are you have units. And that is where we are talking about our level. Thank you so much.
Every time I kept thinking you're going to stop and you said ETC, ETC, ETC. Then you ask, Dr. I have a news of your meetings so that we can be able to reinforce. Because Dr. Mary is the doctor, it's welcome Dr. Mary as a doctor.
Thank you, Barbara. Thank you very much for the welcome and a very good afternoon to all of us. I will stand with the protocol already observed and I will be very short because I know that I've been saying I already made end of forgetting every other thing. I am a very good afternoon. I have been introduced simply coming here, that's easier to remember. The one thing I know that we are all going to take out of this room is that sustainable development today is no longer a choice, but a way of life. I think that is one of the takeaways. I know there was so much into what we have learned. I know that there was going to be meeting from different of us in the institute and your different organization. I went into what the institute is doing to contribute to the SDGs. And I speak to that we're very much contributing to. But you know that this issue of sustainability, green, ESG require a lot of about that. And what are the what does this mean to us? And you know that different organizations have had to enhance their missions to align because they will impact you if you remain the same way. We have recently aligned, we have recently enhanced our mission. And our mission is promote professionalism and improving market training, research and consultancy, for users and providers of financial services.
I thought what stands out is the professionalism there, professionalism, financial inclusion. I think those directly speak to sustainability. You can clearly see the progress within our mission. And that alone indicates to us that it passes down into their activities, the strategic objectives, and everything that we do at the institute. Today's workshop, and another thing is that we are contributing to SDG 1, financial inclusion, and I think that brings me to T. Yeah, and I want to bring in the issue of that. We are contributing meaningfully in the activities at each level. You clearly have that even at top level, we still need a lot of literacy, financial literacy for support. I will skip now go to health. Specifically, our signature annual and this takes about 4 months, 3 to 4 months. And what the fitness challenge, we have 800 pounds in the fitness challenge. It is now, and I know how I have just for exercise. From the one we have to exercise. And I'm example. I am there. In the one that is and what's intense. And that is a health benefit. So we are working and having fun at the same time. We know that the matter of into as health benefits, health and well-being is very much to us. I know that employed. That's our last skill. Here I was thinking, I think all the smart and the ones that are going to organization. Very good. Employees when they are doing things too. Building and also to SDG number 1. It's very essential. But what are we going to do? Importantly, or focus on hearing and curriculum development. We have been able to develop curriculum for the ESG, particularly talk about the industry ESG that was developed by UPA, Uganda Contract Association. We driving the curriculum. Tier the curriculum into levels, bank levels, board level, senior management, officer level, functionality. That I am this guy, I am a senior manager and finance. So we crafted that as such, and we got in the costume. We want training in ERG, we are paying over actually more than 2,000 over 3,500 participants. Regionally, this year we paying over 2,000 participants in finance, and this was regularly tier board members and the media. So again, that's inclusive. I think we need to that I remember. We have also been helping with our curriculum, sustainability curriculum, we give you like understand program, and that's really beautiful. Sustainability, sustainable finance curriculum in this country. So I'm sure that many universities that are doing to have input when we look at finance. That kind of obviously, we have been practical in part of trainings, and we have recently changed our type of training. Will come to us and say, because the management and here, sometimes they train you well. So you after training, you have to have something new give you a indicator of what your pain points are. How success looks like, and after 3 months will come back to you, measure impact. We want to take it further and send to your functional health to us has really actually changed. There are any changes that has been impactful, and also that also what then we give you. Because we that your idea is that learning is long term and not just a one, it's not transactional, transformational. If you look at our river, our tagline, learn, transform, leads, you can see some whole sustainability journey, just a one more. Then we have quality, that was also in how we contributing to that, how we speak to just one thing for the time. Our signature program and that we is the women conference. I think a number of us have attended that conference. It's been very beneficial. There's been lots of requirements for us to the leader program. I think opportunity for ladies, women, standing joy experiences. Talk to what we need all the lots of things. We really want to enhance it. Now, I think it's right to we are responding. Last year and this year, we ran a program for the 21st century skills. And I think if you read the SDGs and think about education, you will see that people in the 21st century or planning for a future, studying for the future and not today. So we are responding that way. This same one. And economic when talents to the economy, specifically through our country program, using the leadership program, provided by one of the MDs, in one video, in our science and service program. And aids improves. We continue to invite you to this. We have teams to show that learning is long life. CPD continuous professional development. We have a CPD to our members and we talk about issues. And then we have that's just a particular machines. So that's lifelong learning as a requirement of the SDGs. And obviously we are not just building areas, but we are shaping a workplace or a workforce that's economic growth. So it's not just learning, but importantly the journey. Decent work, which is SDG 8. We have recently completed with our first study for the industry competence framework. There's a lot to unpack out of this industry framework. We know that entities do have this banking sector that have this, and we have agreed that this is going to be first. The we have several institutions in the room, and we had a first phase where we will have of banking like this. But if I'm a taker and I'm a seller, I want to need to finance. What do I need to study? The proficiencies in there, the technical, the skills, the knowledge, spend it by themselves. And what is exciting, you know where you are going. I will think about touch and consistency also under design work. Six to innovation, you know, we would like to go to new knowledge, the markets, problem of two professionals as they need to write, so we have research. We have partnered with the university, the one that happened, the faculty partnered with the university, and the experts to lead us on that journey. So we are excited to we are saying that we are very much. And our organization started to so you know here these steps are now recently there is a lot of activities to handle there. As we about climate action, which is SDG team, we do a lot of work there. We are building capacity for sustainable finance. We are talking about how to run under ESG training till we can 1,100 participants in the months. This year we ran about 107 participants from different was on sustainable finance. We have ESG, we have training in ESG. At this point, now we speak about planning conference. Normal training, another training on ESG reporting. Before we got feedback from the meetings that ESG reporting is very most difficult and most so this ESG will be ESG assessments. So we have 180,000 shillings only, a 2-day program, 2 hours each day, and it's happening with the 21st and 22nd of November, and that will be online. So collaboration, consider about partnerships, benefits. We are good here. We have partnered with a university, the university has spoken about that. We are in one of these rooms with notes, at the finance conference, and we continue to partner with to the financial associations that will carry development. ESG, we have partnered with the regional institutions of ESG. So they really a lot, but I put your time. And after the activities here, I'd like to thank you very much. And my parting shots will be, as I conclude, that it starts with us. As much as we are about to do everything, what are we doing ourselves? We as Mary, what am I doing to contribute to that? SDGs. And everyone will, if you all contribute it, I'm sure that we will work the journey faster than we will about it. I want to thank you very much.
Can we stand up? Can we stand up? Thank you very much. That we have the anthems.
It's not.